Hello students of class 12. Last day we talked about income method of national income accounting, and today we will learn expenditure method of national income accounting. So today's topic is expenditure method of national income accounting. When we are to estimate different types of expenditure in an economy in expenditure method, we will notice the different economic agents who are incurring expenditures in different forms. These economic agents are households, business firms, government, and foreigners linked with our economic system. What is the expenditure incurred by household sector? Expenditure incurred by household sector is termed as private final consumption expenditure. Private final consumption expenditure refers to consumption expenditures in various types of consumer goods and services incurred by households. This expenditure may be on non-durable consumer goods like food, may be on durable used consumer goods like furniture, may be on semi-durable used consumer goods like pen, pencil, paper, different electrical goods, etc. So altogether, expenditure on all these types of goods, durable, non-durable, semi-durable, gives us private final consumption expenditure incurred by the households. So, whenever we are estimating total expenditure in the economy from different economic agents, if we add them all, we will get GDP at market price, gross domestic product at market price. So our first step is to estimate GDP at market price. Our first step is to estimate GDP at market price and C for private final consumption expenditure is one of its important components. C stands for private final consumption expenditure. Next component of expenditure is I. Capital I stands for investment expenditure. Investment expenditure means gross domestic capital formation in the economy. Gross domestic capital formation refers to the expenditure on capital goods by the business firms to run their business units. There are two components of gross domestic capital formation. Component number one, gross fixed capital formation. This includes expenditure on durable goods, durable use producers' goods, or durable use assets of the producers. Plants, machinery, building, these are included in it. Another important component is inventory accumulation or change in stock. This stock comprising stock of raw materials, stock of semi-finished goods, also stock of finished goods. The change in all these types of items is called change in stock. Change in one financial year. This is called change in stock or inventory accumulation. Change in inventory accumulation. So gross domestic capital formation is not only gross fixed capital formation, this also includes change in stock. Add them, you will get gross domestic capital formation or investment expenditure in the economy. These expenditure is incurred by which economic agent? By the business firms in the economy. Another important agent is government sector. Another important economic agent. Government sector, to ensure welfare of the economy, generally spending on social overhead capitals. Social expenditure on social overhead capital incurred by the government sector. Also, government expenditure is incurred to run government administration, to maintain law and order, and also for the security of the nation, expenditure on defense. So in this way, to ensure social welfare, government expenditure is must, and this is an important component of total expenditure in the economy. G stands for government final consumption expenditure. Last, X minus M. Here X stands for export and N stands for import. So this is for the another economic agent, foreigners related to our economic system. Part of our domestic products, part of our domestic goods or services purchased by the foreigners. This is our export expenditure. And opposite to it, foreigners are also selling, we are purchasing from them. This is our import. So our main consideration is what is net export income. We are selling our products, also we are purchasing. The difference between export and import gives you net export expenditure. So these are the four important components in expenditure method. In first step, C plus I plus G plus X minus N. C for private final consumption expenditure. I for gross domestic capital formation. G for government final consumption expenditure. X minus M is standing for net export in the economy. Add them all, you will get this very important aggregate. GDP at market price, gross domestic product at market price. So in expenditure method, always you will estimate gross domestic product at market price in first step. Now, whatever will be asked in second step. Suppose you are asked to calculate national income. So in second step, you will calculate national income. We all know national income means NNP at factor cost, net national product at factor cost. You have to calculate it. And you have already got GDP at market price in first step. So some adjustments are required so that you can have national income from GDP at market price. What are these adjustments? You have to move from gross to net. Whenever you are moving from gross to net, you have to deduct depreciation, minus depreciation. Also, you are moving from D to N, means domestic to national. Whenever you are moving from domestic to national, you have to add net factor income from abroad, NFIAB. And another important adjustment is you have to move from market price to factor cost. Whenever you are moving from market price to factor cost, you have to deduct net indirect tax minus net indirect tax. So by these three adjustments, you are getting national income, that is NNP at factor cost, from GDP at market price. So in this way, we estimate national income in expenditure method. So I repeat, in expenditure method, your first step is to calculate GDP at market price. How? Adding C, I, G and X minus M. X minus M for net export. Whenever you get GDP at market price in first step, in second step, by adjustment, calculate national income. So again, I will supply numericals so that it becomes easier. When you will calculate, it will be very much clear to all of you. I will supply the numericals on expenditure method. This much today. Thank you all.